So hi, I'm Esteban. I'm managing partner of Megalodon Group. We own a hedge fund which is based in the Netherlands and are focused on active trading there. Another company which we own is an OTC desk, which is also run through the Netherlands, white labeled in Switzerland and in the UK. And we hopefully set up soon here in Dubai as well for proprietary trading. I'm an early investor in crypto, invest in ICOs personally, not through the fund, and happy to be here.
Yeah. Hello guys, my name is RUSLAN. I'm co-founder and president of Taas Group. I guess we are familiar or heard about Taas Token as a Service. It was the first tokenized closed-end fund. We've done our own ICO. It was like more than 1 year ago. Taas is dedicated to crypto assets, and the whole system was built to provide the transparency and efficiency to the market that the market was lack of. Right now we are running one fund, launching another one, Taas Capital Fund, operating in Singapore, Luxembourg, Malta, Switzerland, opening office soon in London, and hopefully somewhere in the East, in Korea. Besides that, we have the software company that is developing different kind of products that we see the market needs really urgently, like different trading tools, analytical tools. This is it. Yeah.
Hi, my name is John SOUZA. I'm the CEO of Kingsland School of Blockchain. My partner, Jason King, spoke the other day. What we do is that we train blockchain developers. We place blockchain developers in jobs with corporations. We also have a BPO IT side, so if anybody here needs blockchain developers, we can also deploy you. And we do an incubator accelerator, so we accelerate and incubate companies that are looking for potential investment. We just concluded the largest acquisition in Eastern Europe of the largest private university, which was Soft Uni. We're doing an iteration of our class starting May 7th in Singapore, and from there rolling out to Korea, Japan, Philippines, Australia. So we're looking for regional partners in the Middle East right now.
Hi, my name is ERAN. I'm the CEO and founder of Shopin. Shopin is working on decentralized shopper profile, where we work with retailers to give users 3 to 5 years of their purchase data back, so that incidents like Cambridge Analytica and Facebook don't happen anymore, by creating better data sets where the users are the owners of their data. And when users go to other apps and websites and stores of retailers as well as publishers, that data drives the most personalized experience whilst keeping the users in control. And we have a cryptocurrency called the Shopin token where retailers can pay the user for the full amount of the advertising revenue. So now the user gets all the advertising revenue in Shopin tokens and can come spend it back in the world of retail. When they come to the world of retail, the same data set that targeted them for the advertising is the same one that drives the product recommendations. We're raising a $50 million token generation event, $41 million raised in the middle of a crypto winter. So I've had a very interesting experience over the last few months of raising in a very harsh time. And I'm an avid ICO investor and hodler.
So why don't we start with you, ERAN, and we can kind of have you guys just interact with each other, and let's just get a discussion going about the state of investment in the space.
So I think basically we've obviously seen a big pullback in the market. I think this is not a big shocker, and should be a big shocker for anybody who has not faint of heart and who's been in this for more than 6 months. Last year we saw several pullbacks. Every time that there's regulations, every time that there's change, we always see a big change like this. So I'm not. It's working. Yeah. So I'm not really surprised to see the pullback in the market. The market was extremely frothy. We had just a surplus of retail investors, and investors on average are highly unsophisticated and they follow hype, and they don't listen. They don't take money off the table. So when everybody was saying that the market was overinflated, yeah, it was. What I'm really excited about is that 2018 is the year that we're going to see institutional capital flow in. And actually, we have regulation to thank for that. So I think we're going to stand in front of a very exciting year. where we're going to see less fraud from projects, you're going to see less Ponzi-like schemes and a more sophisticated market. And I think that's something we should all be excited about.
Sorry, guys. Mo Levin, ladies and gentlemen, a little bit of ventilation.
Thank you for coming.
Two things. First of all, thank you, Esteban, for telling me it was at 11:30. So, you already did all the introductions, right?
We covered
Yes, we
it.
did.
Where are
Covered
we?
that. We're done.
The panel is over.
Easy.
You're
All
excused.
right. Well, you know, a little chaos is good in an event. I put together this panel because I wanted to have people from all different viewpoints, right? We got Esteban, who has a legal and a hedge fund background. We got Ruslan, who launched Taas 2016 at this event. Fantastic input, and sees more deal flow than anybody else in the room. John, a co-founder at Academy, also investor, built many companies, and somebody who's raised successfully and continues to raise with Run. From a legal point of view, let's start with you, Esteban, and maybe, because that's sort of the thread that runs through us all, is there's a legal aspect to this whole concept, and we're not going to have a regulation panel because they're boring, but from a legal perspective, what are you seeing in terms of raises here and ICOs and, let's say, red flags throughout this event?
Yeah, I think if you look at the space from a regulatory perspective, it's quite worrying sometimes. And always when we look at ICOs, I will always look at first instance on the regulatory aspect. So meaning that I'll always look up where a company is set up, whether or not they will issue security tokens or not, whether they will go that route, which could be more complex, but which could be more appealing for investors later on. What you do see in relation to raising funds is that a lot of people are making small mistakes, minor mistakes, but those mistakes can be really bad for your reputation as a company, but also if regulators come in, they can actually shut down your company or penalize you. So examples which I can give is if people mention an example of possible profit which you can make if you buy their token. So buy your token at 10 cents and then we think that the token will be $1 at the end of next year. That's not a thing which you should mention because that's already a massive red flag. Also what you see with certain ICOs that they didn't think through the full legal aspects, and that's not only financial regulatory, whether or not you're a security or utility token, but it's also how to look at it from a tax perspective. So how would the funds which you raise be taxed? Would it be corporate income tax on it? Will there be VAT on it? Are you rendering services to people? So
I think that's an interesting point, which is if you are going to invest in an ICO, you're going to invest in a company, that should be very clear because it may be the case that the market capitalization is 20% less just on account of the company has 20% more to pay in taxes, and it's less of a good investment. Are you guys at Taas looking at things like this and what their, besides for what their legal framework is like, their company structure, are these some of the things you look at with taxes and when you invest in a company?
Yeah, we are actually taking into consideration really many points here. The due diligence list is becoming longer and longer. We have about like 40 points, I guess. If we're keeping to all these points, checking out everything, I guess none of the company can pass this due diligence list, yeah? But still, we understand this market is growing really fast, and there are so many changes. As Esteban mentioned, legal framework is completely different. Like 1 year ago or 2 years ago, you were reading the white paper and you've seen just one disclaimer, maximum what you've seen from the legal part. And they were saying, okay, we're going to incorporate the company somewhere soon. So those days it was not so much important. These days, due to regulation policy, due to tax policy that is coming into place, thanks God we have already so many products in the pipeline, hopefully being delivered soon, yeah? That are helping from the regulatory perspective to do KYC, AML, to audit the funds. But what is the one of the key challenges that we see on the market when we are investing? We see, okay, none of the companies has declared to the market that they're gonna run the funds. So what I mean, for example, they're raising 20 million to do some forestry job. The Ether went up. They have, in the end of the day, 40 million. What are they doing with the extra 20 million? Are they giving back to the investors? No. They are becoming the investment fund. This is not right, right? Or what is happening if the market goes down? So that means they will have not enough substantial capital to deliver the product. So I'm really looking forward for the companies to have at least a couple lines that these funds will be managed professionally, or these funds are going to be delivered at least partially to the funds or to the fund managers to do this job properly.
Sure. And then to touch on this extra funds that you have, sure, they need to be managed professionally, and this should be very clear in either the white paper or in all their presentations. But if we talk about the geographical impact of raising funds in different countries, because like the disclaimers you see, first it was the United States, we don't accept US residents, and then you have to do a check mark, and then you're okay to be a US resident, but probably not.
So it is #1 country in raising capital.
But US is #1 country, and then,
Right.
then Singapore came on, and then China comes on, and John having a company and raising funds, which is not a security. What is your take on this sort of global raise where, and this is a question for you as well, ERAN, it's you want to raise from as many people as much as possible to hit the goals and to be able to successfully fund your company. The geographical limits, how is that playing into the raise?
I think it's a great question. And first of all, by the way, I really have to comment that taxation is something that every single person who's running an ICO should be aware of. You know, I find it staggering when I meet my fellow entrepreneurs who are running ICOs or token generation events, and they have no idea what they're doing with the taxation or what the ramifications of the taxation are. So
That's what happens with taxation.
that's what happens, exactly.
Exactly.
But interestingly, you know, with Shopin, we raised the vast majority of our funds from Asia and from Netherlands. We chose not to delve deeply into America. I think it was prudent. It's not that we don't like American money, but I think until America sorts out it goes beyond guidance and goes into formalized regulation on what's possible, what's not possible. I don't want to be in that gray area. So I think it's prudent to sometimes not take money when it's on the table at this stage.
When you look at overall, and really dovetailing on what you're saying, is that what I've seen, which is commonplace, is the lack of thought into what proper structuring is. Being a little bit of bias, being a former investment banker, I think the ability to raise money through ICOs is absolutely amazing. But then on the other side is absolutely terrifying, because most people shouldn't be raising money through ICOs because they lack the understanding of what governance is. So when you look at tax planning, you know, when you talk about ICOs and investing in ICOs, if you're doing an ICO from a US company out of a Delaware shell, to me immediately that's a no. I wouldn't even consider it, because first of all, you're losing immediately almost half the money in taxes, because they haven't had proper tax structuring. They don't know who their attorneys are. Their attorneys aren't name brand. I mean, we at Academy, we have 5 major law firms, and each one of those plays a different piece of the puzzle. Yeah. It's extremely important to have the proper structuring on a global basis. So when you talk about on a global basis, what is your taxation? Where is your IP held? Where is your token seller held? You know, what are all these entities, and what role do they play with the company now, and what role do they come in to play in the future? I mean, it's extremely complicated, and for someone to just think they're going to go ahead and do an ICO and raise $5 or $10 or $20 million on a haphazard basis is going to put you know, people potentially in jail on a long-term basis, you know, just because of sloppiness.
I think we hopefully, and I'm optimistic that we will see more of this information being shared publicly about what that is like for each company, because now it's quite hidden who's representing them in all these things. And it is important for investors to know all these things. Switching gears for a second, let's talk a bit about the current state of affairs. And if we look at historically, which is the last 1 year or 2 years, 2 years ago you have these raises like Civic, Polkadot, you have EOS to a certain extent, but you have like 100 million in 10 minutes or 30 seconds, or just insane raises in seconds. And that's shifted over the last 6 months to slower raises in private sales and pre-sales and pre-private sales and private pre-sales, and then to the final, the public pre-sale, ICO. And these things are just, well, Ethereum did it in like 50 days or 40 days. So there is a length of time which it takes for people to invest, but as hype is reduced, I think the current state of affairs is now people are starting to wonder, and many investors are thinking, do we do equity investing? Is that on the table, or is it going to be something like, is tokens going to be the primary way to raise funds now? And if you guys have comments on this.
So I think this is where it's getting really interesting from a security token point of view. As we move into security tokens, there are ramifications which are equivalent to essentially owning, or practically owning equity in the company. But it doesn't necessarily have to just be that way. And what I'll tell you about us, for example, is that we're raising our token generation event, which is almost closed. And then we're raising a convertible debt round, an equity round. And for us, the only reason we're doing the convertible debt round, the equity round, is because we're bringing strategic capital in. So we don't even allow anyone into that round except for strategic capital. I think you're going to find blends that are going to be wonderful and surprising throughout, and I think that when regulation hits and you actually truly understand the ramification of what a security token looks like, because some people have utility tokens that are wrapped in security, you have to suddenly realize one thing that's exciting. The way we looked at equities and its equitable securities and the stock market before is actually not entirely relevant for what we're seeing now. Tokens can be utilities, they can be commodities, and they can be securities, and they can be currencies, and they can be a blend of them at the same time. There's no way you can actually look to the past to understand how most of these things will react in the future. And I think that we should proceed with that mindset.
I think to add on that as well, I mean, countries, let's say there's no clear definition on what a security token is. So let's say Nigeria thinks like, okay, why don't we implement like this definition? It could be completely different than what they, for example, would see it here in Dubai or in the US. And you can encounter problems there if you didn't have like proper legal support on what your token actually is. And it's not like some phrases which would make it a utility token, because sometimes obviously it's a security token and then people will be, no, it's utility because of this and this, and that doesn't work that way. So
Are you saying that you're hoping for a harmonized treatment?
no, I hope that governments will give more clarity. I mean, if you look at like some different market like FX, it was unregulated, people could do whatever, people making a lot of money, and they thought they could do whatever they want until the moment it got regulated, and people get into jail, people get penalized, people get into trouble, and that's not what you want to see. You want to see that like this market grows in a slow way. I mean, not like full regulation, full throttle, but like at least give more guidance. I think that's really important for the ICOs.
I take a little bit of a different stance. I mean, coming from an investment banking background, is that if someone has a roadmap and they don't have a product or they have an idea and they're raising money, that is a security, because you don't have even though it seems like in the marketplace right now between all the major law firms, opinion letters are almost for sale, depending on how much of a retainer you pay. I've seen something I've never seen before, is that top-tier law firms asking for advance fees for litigation in advance. Which, if someone's asking for money for litigation in advance from a top-tier firm, you already know what road you're going down. Yeah. We were in a very unique situation. Is we had during our raise, because we kind of ensure the future of blockchain. Without developers, blockchain doesn't exist, and there's really no way to go ahead and train these folks. So we've had 11 private equity and venture capital firms ask us for equity. So we really kind of knew what we were sitting on, but the goal right now for the token sale was not going ahead and selling equity. We will go ahead and approach that subject in the second quarter of 2019. That's because that's in our roadmap. But right now, I think that the issue that you have in the marketplace, that most tokens that are being sold are securities. There are very few that have utility day one.
Well, coming back to a question about what was before and happening right now, I guess there is an explanation. The hype is still there, it's definitely, because you can see how much was the market like 1 year ago, $15 billion. or $20 billion right now, 350, and it's going up and down. So that means that the money comes into the market definitely. There is still high volatility, but this is a different topic. The companies were raising very quickly, very fast, because there was no regulation. The market was so easy to enter. There were no barriers, hurdles, but still it was much more riskier. Right now, people have less possibility than they had like 1 year or 2 years ago. I mean, the retail, all this industry was born in retail, right? And it's going to the institutional level. So it is quite unique for the whole financial world and financial history. That means it is not about the 20 seconds or about 1 minute. They have, the rules are applying, and there are more and more, there is much more demand from the market. That's why they require much more time. If we take a look at how many tokens were issued, about 49,000 tokens right now on the market. It's an incredible amount. How much money was invested? Like 6 billion, up to 12 billion, different valuations.
Yeah, and I think if you compare it to last year, I mean, in the beginning, you would look like at this ICO, you would look forward to the ICO. It's like, oh yeah, it's in 2 weeks. I'm gonna get ready. I'm gonna sit behind my computer to send the ether. I hope I don't miss it. And now it's like, probably if I log in right now, I can invest millions in like 20, 30, 50 different ICOs. And I think that's also for the market itself. Like of course, to some extent you may want regulation, but also we need to self-regulate. If you look at certain things which were happening, let's say last winter with BitConnect, something like we all know it's a scam. Like why do we allow it as a community? Like I wouldn't take them as a sponsor, which like some other events I saw them. It's like, yeah, our main sponsor is BitConnect. I'm like, man, like you know that's like a money grab, and
This is
it's a
advantage
pity.
and disadvantage of self-regulation.
Yeah.
You know, the worst regulator is actually the community.
Yeah.
They will not let you down. They will keep an eye on you. This is the worst regulator and the best regulator, actually.
Yeah.
And just speaking to that, I think self-regulation from communities is important. And if you ask me for the things that are wrong in the market, okay, and like really wrong, I think one of the well-known facts about our ICO is we have never run advertising, we have never done a bounty, and we've never done an airdrop. Why? Anybody who tells you that their level of looking at knowing whether an ICO is good or not, judging by the size of their Telegram community, is a moron.
Yeah, totally agree.
No, seriously. People better step up, you know, and start thinking about it. I can do an airdrop tomorrow, and I'll get you 50,000 people onto that Telegram like that. That's how frauds happen, how scams happen.
Absolutely.
Okay, you've got to start looking at the things that have never changed about whether a startup is going to be successful. Team, stickiness, and total addressable market size. This is all that counts. It used to be team technology traction, but technology is not enough of a differentiator. A little bit more so in the world of blockchain, you know. And traction is not as good as stickiness because you got to see whether people are using the product and also whether they continue to use the product. So, but team has never changed. And if you validate the team and you believe in the team, an A-class team can take a B-class product and rock it. But no B-class team is going to take an A-class team, A-class product and rock it. And I think that the market needs some element of sophistication when they're looking at these companies to ask the right questions and look beyond the hype. And this is difficult with the retail investor. So as we see Q3 coming and institutional investors start to come into play, we might start seeing better signals for retail market to follow.
This is where I want this conversation to head in the next round. Like, there's an asymmetry of information between people in crypto and people that are not in crypto, and even people that have been in crypto a while, then people that have just come into this. And there's just myriad ICO rating sites and information sites or feedback sites and hype rating sites. I don't know what metrics they even come up with, but
hundreds.
There's stars and there's dots and there's numbers and there's who knows what's happening.
It's all make-believe.
And it's the most easily corruptible system because you can pay.
It can all be bought.
everything can be bought. You can, and an ICO can just make an ICO rating site, give them a top rating, and give everybody else bad ratings. How is this going to be addressed? Because now, like I remember years ago, when somebody mentioned Bitcoin on the news, it was a big day. Now they talk about Bitcoin all day, but there's still, the question is open because I don't know what the solution is and how information is going to be more transparent and clear and available.
It's like when you sit here and look at startups in the space doing ICOs, and I did curation for the Extreme Tech Challenge for 3 years with Richard Branson. I'm actually amazed. I'm terrified with how companies are actually evaluated, because they're not evaluated. It matters who's the buyer. What's your private? Is that a candy token where you have a whole bunch of people getting 95% off getting free tokens? You brought up the point before about ICO selling out in 30 minutes, 40 minutes. Civic, great team. Guess what? Delaware Corp, absolutely horrific structure. Half the investor money is lost because improper structure. So great team, but who the hell was their legal? Just improper structure overall.
We fired the illegal, by the way.
Yeah. I mean, we made the cognizant choice to go after strategic investors. Yeah. And at the end of the day, you talk about team, and it also becomes your team. Who's your legal team? Who's your tax team? Who are your strategic investors that are going to help you down the road? That's going to be critical. It's not going to be the 15,000 or 50,000 people in your Telegram group.
Yeah. I mean, I do think that we see like some developments, like for example, look at Ontology. It's like only accredited investors, and I like those type of ICOs actually, because like you cannot actually call it an ICO because accredited investors are there. But the thing there is that like if you are like reviewing a lot of ICOs and if you're really long into the space, like you can sense in some sort of way what will be the next big thing. You're not always right, but these new people come in more like the private investors, individuals who want to invest in ICOs. They don't do the proper due diligence. They just look at, like, for example, a YouTuber and think like, oh great, he mentioned this ICO. I don't need to read anything. I just go full throttle in, and yeah, that's not how you want to promote your ICO, and also not to run ICOs in the future as well.
Well, I guess you remember, you read a couple of white papers, yeah? But it was a long time ago. You know why? Because there is incredible amount of information. Yeah. You mentioned a lot of resources, I guess there are hundreds of them. We have just a team dedicated to that to make the proper analysis and due diligence on the ICOs that we know or we would like to review. We've done about over 600 ICOs actually. We have reviewed and invested in 30 only. And we cannot manage all of them. If we are talking about the retail investors, it's really difficult for them to do all the due diligence, technical one, business, then the team to evaluate, to get in touch with to analyze everything is really time consuming. And he's analyzing or she's analyzing and saying, okay, I should invest, I don't know, oh, the team looks good. Let me look at their opinion, who is behind that, right? So I still believe that there will be soon the certain players that will provide the qualified, really good quality information, really good quality reports, brief one, extended ones, so that people can review and rely on those reports. We still don't have such companies on the market, but yeah, hopefully we're going to be one of them. Yeah.
There's actually some which are starting to emerge. But I mean, really what it comes down to, Mo, is that people got to put their common sense hat back on. One of the things that I urge, and I strongly urge, every startup in the ICO space and every investor to start to put into place is that the team has a 3-year earn-out on their tokens. 3 to 4 years, okay? Not 1 year. If the team gets the tokens in 1 year, I think you should run for the hills. Seriously. If we all know that every single startup classically has a 4-year vesting period with a 1-year cliff. So why is this suddenly changing for the whole tokens? Especially when people tell you that the tokens are worth more than the equity, because that's the big story, right? And then if that's also the case, then let them disclose at the beginning of the year what their product milestones are. Just the product milestones. And at the end of the year, if they want to get their release, they get their tokens at the end, they get the yearly release of tokens based on reaching the product milestones and disclosing them to the community. And if they're a month late, they wait a month. Because isn't that what the money's there for you to produce a
Well,
product?
there has been these ideas, and and that is sort of, will we see a different type of raise where you have the smart contract with trusted oracles that will release the tokens to the team at a certain point, or release the funds to the team? Because having 30 million up front,
It's nonsense.
No, but
nonsense.
I also think what Ruslan said, like, yeah, okay, then you raise 30 million. Let's say Ether price doubles and you have 60. What are you going to do with the 60? It's not yours. You cannot just like think, okay, now I have 30 left. Like I'm going to invest in ICOs myself and make a lot of money. No, that's not a possibility. And also, like if you look at it, like people always compare ICOs with IPOs, and I don't agree with that. I mean, currently a lot of these ICOs they're startups. So I invest in a startup, which should actually be a seed investor investing in a startup for equity. Thereafter, you will have VCs coming in. Thereafter, you will have private equity, and then you will hopefully have a successful IPO. I've done a lot of these M&A deals as a lawyer. I saw how all these things went, and it doesn't go like that. I mean, if to give you an example, like this, there was this Telegram ICO, and we got like an allocation there as well. And then you are like in a negotiation with people, and you're like, man, like what you are offering me and the way you do this whole process is not the way you should do it. Like from a traditional perspective, and because it's crypto,
What you're
it's
saying
not
is
different.
like the angel seed and these things, but
Yeah.
is maybe what you're trying to say also, there should be, is phases of raising an idea? Is it like, have a smart contract that has trusted oracles that release it based on milestones, that release the funds based on milestones, very difficult to implement. But to have like, Eternity had two raises, maybe one company does a version of their fund and then another version of their fund and do multiple raises over time, or to sort of mirror that traditional angel seed.
The tranches.
Well, there is no unique scheme how to do that. The market is growing, is developing really fast, and there is no unique way to do that, to lock, to do the order calls or whatever. What is lack on the market is liability, responsibility after they do the ICO. We don't hear anything. The guys are happy, everybody's happy, we're doing the product. Thank you. See you in a year or 2 years. Please, there should be really responsibility, really announcements about what is done, why there is a delay. There must be proper communication with the community. These things must be checked really properly, and it is difficult to communicate because ICOs don't have any liabilities, any obligations to do that. They can do as a company whatever they like.
And what you're talking about is fiduciary responsibility, really. Is that the amazing thing that we always say is that people, and we've gone to a lot of the top, quote unquote, top ICOs that have raised tons of money. Sitting on tons of money, we ask them, how many developers do you have? And then you hear the answer.
We have 14 data scientists, 25 taggers.
This is not about you.
We have five external engineers, a core team of 11 people, and we're still suffering, and we still need at least another 3 Python engineers to help develop our blockchain. We're looking for a creative director, a UX designer, and a lead designer, and probably an extra marketing person and a business development person. So explain to me how, when you're doing a $100 million or $150 million ICO and you've had a year to go, okay, we haven't even finished our token generation event yet. How are you building what you're building? How are you even going to get out the gate? Because I know that right now, we're understaffed.
We can take
I like what you're saying.
Proper architect,
I like what you're saying. Like, as a lawyer, I used to advise like e-commerce giants. And what you're saying, like I read your profile, and it's like, okay, what's behind it? You have sometimes ICOs which have a similar profile. They'll be like, yeah, we will build this like new e-commerce marketplace which will compete with Facebook or any other massive giant there. And it's like, how will you build it if you only raise like, let's say 50 million? It's tough. And then you ask like how many developers you have. It's like, yeah, like it's me and my partner, and we have some marketeers, and then you already know, like, no,
we're
this is
outsource.
we're gonna outsource.
Yeah, I mean, it's math.
It's
not that hard.
impossible because I saw like certain companies, I saw them grow, like from startup to scale up to going IPO, and you saw the whole process, so you know how it works. And currently, what we have is we have some institutional money from our side coming in. They have like requests to buy specifically Bitcoin, and then they ask like, okay, do you also know like ICOs where I can invest in? Like, to be honest, yeah, there are a few which I do like, but it's quite difficult. Like, if you have that amount of money, yeah, where are you gonna put it in? And they can easily fill any ICO if they want. So yeah, like I say, I think the space is heading more towards institutional.
We personally check out all the wallets of the ICOs.
Yeah.
We have the tool where we can see, okay, the team is moving money or not moving. Because you can declare whatever you like.
Yeah.
But the reality is different. That's why you have to check it, double check, spend your time and see, okay, these guys are moving somewhere money. Why?
Yeah.
There is no communication. Oh, okay, we bought this one, this one, this one.
Maybe
okay,
they're buying
know
Lambos.
that. Yeah, but coming back to the point, if the team doesn't have at least like really core development team, it is scary. Because to find the proper solution architect or really good business dev can take you ages.
Yeah, and so I think we've covered that one on how they're going to deliver and what happens after the fundraise. The other elephant in the room is you're saying you could check the wallets. Other people say to check the wallets, but the idea for companies to be companies need money in fiat. That's just how companies work right now. It's the unfortunate case we're in, but for at least the foreseeable mid-future, things won't be denominated in Bitcoin or Ether. Investing into companies or best practices, as you're seeing, is, I just want some thoughts on, are you seeing, is there best practices, OTC sales, market sale at the day that the token sale completes? Is it something where the company turns into a sort of investment fund and bets on the price of Bitcoin? Or is the future something like what Bitcoin Swiss does, where you can also invest in euro or Swiss franc? Any thoughts?
I think, first of all, crypto winter teaches you interesting things, right? Because if you're raising in a crypto winter, as you're getting the Bitcoin and the Ether, it can be depreciating, right? So you have to decide, what am I building, when am I building, when do I need the money? And a very large percentage of it, or a good percentage of it, let's say at least 20% to 25% of it should be taken into fiat or into US Tether as quickly as possible in order to ensure that you have execution capital. 100%, no question in my mind about that. I'll also let you know, by the way, it's quite fun, is that over 80% of anybody, or of our vendors, will take Bitcoin and Ether as payment, which I personally enjoy. But I think that different situations, call for different things. But I think one of the biggest things that you need to understand is that a lot of the people who are entering into the space are fairly young and inexperienced. And when you're young and inexperienced, the best thing that you can do is to try to find people who are going to help and mentor you, and great service providers. And one of the service providers that I think you should actually look at when you're getting $30, $40, $50 million in is somebody to manage your assets. And I'm not just saying somebody internal. I think you should, number one, get an investment associate internally, but I think that investment associate internally should be managing an external firm that could be managing your money, such as a crypto hedge fund, that could be making sure that it's not just about the maintenance of your wealth and the preservation of the wealth of the company and the future of the company, but also the growth of it.
Fully agree with that. And I think also take into account that if you do an ICO without proper KYC, AML, it's a no-go. Like, we get a lot of requests from ICOs now, hey, can you help us convert coins into fiat? That's all great, but if you don't do proper KYC, AML, if I didn't see your policy, it's not that, we did KYC, AML, no, I want to see your whole policy. And based on that, we will decide whether or not we can assist you. But
Whether we like it or not, there will be still the combination of fiat and cryptocurrencies.
Correct.
Yeah.
Right? We cannot get rid of them because we are paying taxes in what? In fiat. So even if we are living in the ideal world full of functioning ecosystem, everything is working cryptocurrency, we still have to pay taxes. And none of the government will allow you to do that in cryptocurrency. You will still have to convert it to the fiat. Because this is obvious reasons, yeah? What is this is one of the reasons why we have not so much money flow goes into the market because of the Visa, MasterCard restrictions, and the retailers have not so much possibility to convert the fiat into the cryptocurrency, the legal way, I mean, yeah? They're still trying to find legal way, OTC deals and so on and so forth. But we are looking forward to see really soon the custodian solution for the bank, and that will solve a lot of problems for the people who are trying to raise funds, for the people who are managing funds, for the banks. We will see definitely more money coming in. The institutional players will get into the game definitely, because it is very risky to manage the crypto funds, to manage the cryptocurrencies within the bank, to get the responsible one or second person to be responsible for private keys is really risky. That's why they issue the kind of insurance. But it is not manageable, it is not flexible, and you cannot trade properly. You can do, it is manually operated.
And one of the things you have is that, I mean, outside of the currency risk, which is kind of a lot of structuring, but the number one risk to the entire ecosystem is lack of developers. If a firm does not have a really good plan on how to go ahead and solve their development needs, you mentioned how many people that you need to grow your company.
They're just expensive.
Exactly, it's expensive, but you can't find them, so where are you going to find them and what are their plan? When you're going through all this kind of due diligence, how many developers do they have, where do they plan on getting them? Yeah. And a lot of these folks don't have good answers. You brought the point of young people running companies, and a lot of the folks that have done ICOs have never hired anybody for it. They don't even have payroll. So it's an amazing time, it's a scary time.
All gonna be fine.
It's going to be more than fun.
On that note, please give a round of applause to the investment panel.